Let's now bring on board a special expert. Byron Wien, Vice Chairman at Blackstone Advisory Partners LP, joins us on the show right now. Mr. Wien, hi. Afternoon. Thanks for taking time out and joining us. Your note in the month of August, worried about the second half, raised caution in an otherwise buoyant market as the Fed spoke of tapering and stable U.S. recovery while the markets are up, year to date. The July to September quarter has been range bound for the markets in the near term in terms of returns. What is it that you expect from the markets next?
There's a complacency among investors that somehow will solve this problem and will actually be able to meet our obligations when they become due. So the debt ceiling will be raised. And there's some indication that we're going to come up with a short-term solution to that very soon. So I think when the debt ceiling is raised, there's a good possibility there will be a strong rally in the U.S. I don't know how long that's going to last, though, because I'm concerned about third and fourth quarter earnings.
In fact, Mr. Wien, what is your expectation from the U.S. market with the S&P 500 hovering around that 1700 mark?
Well, I think the market will end the year about where it is right now. I think it may rally when we come to an agreement on the debt ceiling, but I think disappointing earnings will keep the market from getting too far.
Mr. Wien, what are the chances of a deal fallout, as the broad view is that a deal will be done in the 11th hour? How do you think the markets will absorb that?
Yeah, I've always said that disaster has a way of not happening. But that's the consensus view. People are very complacent. They're just convinced that somehow we'll pull a rabbit out of a hat and figure out a way to come to an agreement so the debt ceiling will be raised. The big surprise would be if we actually bump up against it. We haven't defaulted on our debt in the United States since 1801, so it would be the first time in a couple hundred years. So my belief is that we'll come to an agreement, but if we don't, we could have a severe correction in the market.
Mm-hmm. But what, according to you, sir, is the probability of a default for now, given that both parties are, sticking to their position, both are being tough? How worried should the market be of such an event happening over the next few days?
Well, I would give the possibility of a default only 1 out of 5, 20% probability. And if that happened, I think you could see the market fall 100 points on the Standard & Poor's 500.
Mr. Wien, even if the deal is struck, what happens to the tapering plan and the timeline for recovery? It appears that things could be pushed back more than anticipated. The IMF has recently downgraded global as well as U.S. growth for 2014. What is your view on the play out of the events from here onwards?
Well, look, I don't think the economy anywhere in the world is strong enough to withstand a withdrawal of stimulus. So we're still not growing fast enough. We're still only growing at 2%. So there's no reason for tapering in the United States. Europe is recovering, but it's only going to grow at about 0.5% next year. And I still think the ECB is going to have to be reasonably accommodative. The European balance sheet has come in a little bit as bank loans were paid back by various banks after the monetary easing that took place after Italy and Spain got into trouble. In China, the Chinese economy is growing at 7.5%. I was worried that wasn't a real number, but now I think it is. If you look at industrial production, exports, and electricity consumption, it really looks like China is growing at 7.5%. And I think that's because the banking system has been very generous in providing funds. So and we know what's going on in Japan. There's very vigorous monetary and fiscal stimulus in Japan. So government policy is a positive force in economies, in all the developed economies of the world, and in some of the emerging economies. And none of these economies are doing so well that stimulus can be withdrawn.
But what's your sense? What policy stance do you expect from the Fed from here on then?
Well, my belief is that the Fed will continue to be accommodative. They may do some tapering in 2014. I don't think they'll do any before that. But I don't think they'll do a lot because I think they recognize that monetary policy is central to the continuing feeble growth in the United States. So I expect that the U.S. will continue to grow at around the 2% level. I know there's some estimates out there closer to 3%, but I'm skeptical about those.
Mr. Wien, really appreciate you taking the time out and speaking with us today.